So I'm going to be looking at the charts here. We have, as mentioned last week, we are in this big phantom leg. It's being depicted from the high here that was made on Thursday to now Monday. And all the lows that we've been running, they've all been broken through or referred to already by another instrument. So there hasn't been no SMT that I've been waiting for to create that B leg so that we can anchor ourselves from to be able to take price up to higher prices. Now, now that it's building up this premium, I'm interested in seeing old highs that were created from this leg high to low and see if we can get an SMT off the highs. Once we do that, um, hopefully we'll be able to anchor ourselves from our A to B leg, see if we can trade to 25% and take things down lower. I've mentioned a while back we had SMT on the lows here, low, higher, low, right? So we had a correcting correlation on the low side, so that usually means that the 10-year bonds were, I guess, relatively strength compared to, I believe it was a 30, yeah, 30, see low, lower low. So that has been going up. So since this is going up, what do you think is causing interest rates to do? Drop, exactly. So we're looking for this to drop, anticipating maybe looking it up to this external range liquidity or this external range liquidity. But while it's dropping, it's also causing the dollar to drop as well. So I've been looking at this morning before I started the live stream, and I was just trying to see how I can get my foot ready for the week. So we have Thursday. And we have unemployment claims on Thursday, but nothing too crazy like FOMC or non-farm payroll or CPI or PPI, I believe. Nothing like that. So it is going to be one of those dry days in terms of news. We've also tapped outside of this external range liquidity, so we could be using this old high here as support after we had traded from it above at 904. So we'll see if this will continue the uptrend, because again, there has been no SMT here on the highs. Everything has been referred back to. Yeah, this was already referred back to this. So if it's gonna go up higher, I mean, Fridays, London buy side liquidity it's next. Another bearish breaker. Anticipating this being treated as a inverse array until 9:30. So we'll see if that after 9:15, price expanded up higher, closed above it higher. Okay, past this rejection block, old high, retrace back down, headed down towards volume imbalance over here. But also there's a inverse bearish breaker that price used here as support slightly. Now it expanded up a little bit higher. We're looking to see if that was all that was needed to expand up to higher prices. In the meantime, I'll be referring to this entry here. Buying 3 lots, setting my stop loss down to here. And seeing if that will continue the expandment going up higher. Okay, how high? Up to London's buy side liquidity pool. And we have until 9:30 for this to wait, what? That should have been triggered. We're looking for a rally up above London. Or that's so strange. Why didn't it trigger me? I'm still kind of mad about that. We had a 75% stop loss was at the low here, so it would have been like 7 handles. And see, that would have been taking you up. It's 9:30 now, so would that have been taking you up? This trade would have been dealt with, meaning that it would have been already break even the moment the stock market opened up. And now we're looking to see if this trend will continue. So we have a higher low. All right, so I'm gonna be setting my. Has it been? Yeah, it's been like a couple of minutes past the. Yes. So again, I'm looking for 9:45 to see where we're standing. But if we've passed already half of this time, so 30 plus 7, it's like 37. So seeing that we're so overextended up there, I'm gonna go ahead and push my stop loss to break even. Seeing that that will continue us to keep going up. So here's the thing, right? We haven't met a qualified low in the form of S&T, right? There was no cracking correlation. So what should we call it? In a way, we're not in a confirmed buy program. This is still a phantom leg, this high to this low. And now that we've been retracing back up here again, this low to this side has also been a phantom leg of a phantom leg. So in a way, as much as I would prefer to go up to these London's buy side liquidity, the fact that we've been spending time around these areas here is also valid because we're still not in a confirmed buy program, right? Price would have had to have reacted out in a certain low and given us that SMT, but it hasn't. It hasn't yet. So even though yes, this is what we want to see, short-term bullish, the fact that we'd be spending some time over here and now considering even possibly going back to these lows, that's still fine. I'm already out of this position, but we would still would like to. I still would like to see this get tapped. If not, the balanced price ranges are giving you hints of how price would be, perhaps changing its behavior. So if it was a confirmed buy, I would have been trusting every single buy signal created by my balanced price theory. So everything that showed me as reasons to get me up higher, I will go ahead and get into that. Because right now we're in the possibility of getting either high or up lower. Um, you kind of have to juggle between both.